Hello everybody, this is Matador from freetradingvideos.com. It is Wednesday, December 3rd, 2008, and I got a lot of great comments back from my last video. Wanted to address a couple of those, one of them especially from somebody by the name of Munchie112. Whoever that is, great question, good thoughts. Kruger Key, good try answering that. I may have done you a disservice actually by comparing the TRIN a lot of times to the S&P 500. The TRIN is actually for the New York Stock Exchange, but instead of using that as a broad market indicator itself, I was using the S&P 500 instead, which is sort of a great way to read relative strength and weakness compared to that broad market. There's also the TRIN Q, which is the TRIN for the NASDAQ, and you can see those two here. So let me just go over it real quick. So the TRIN, you can see what happened today with this. It's not nearly as bullish as it was yesterday, where it spent most of the day hovering around 0.5, which is extremely bullish. But today was a nice up day, but it kind of chopped around, had a really interesting sell-off, and then a big rally again, a couple big swings in there intraday, to end up back down at 0.6, which is very, very nicely bullish. Some people would even consider that to be getting close to being over bought. But we did have a higher swing low in the broad markets. It's official. Look at the daily chart anyway. There it is, it held. Got a little bit of a gap to work through right here. You can see that. So tomorrow should be interesting. I'd love to again see this make a higher swing high in here. And the higher we go, of course, the better our chances of making a higher swing low and starting to work our way out of this. But we'll see. Anyway, so the TRIN itself. All right, we go back to an intraday chart. This is what happened today. And what it does is it measures, and I took the liberty of making just a quick little Word document. So the TRIN is actually the number of advancers over number of decliners. If you're looking at the TRIN, that's for the entire New York Stock Exchange. If you're looking at the TRIN Q, that's for every stock in the NASDAQ. So in here, you can also see the advancing volume over declining volume. So basically, this is a ratio right here, and this is a ratio. And the whole thing is a ratio of two ratios. So if you get sick of saying the word ratio, it's because there's two of them, and one is over the other. All right, that's why everything above 1.0 is more and more negative. Everything below 1.0 is more and more positive, at least the bullish side. So here's a quick example of how this works and why it's neat to see volume associated with a move down, or not see volume associated with a move down, which would kind of make you look at it sideways. So here is an example of a high number of decliners compared to advancers, with a concomitant high declining volume compared to an advancing volume. So in here you've got advancers over decliners. So you have more people that are selling stocks in here. All right, but what kind of volume is associated with that? Well, in this case, my advancing volume is only 500, and again, I'm just dumbing this down. It's usually in the millions, of course, but just to make it easy, so 500 shares associated with that up volume, or that up number, and in here is 1,500 shares associated with the down pressure. So there you have a high number of decliners compared to advancers, and high declining volume compared to advancing volume. So that equals 0.6 over 0.33 equals 1.8, which is a bearish reading. Very nicely bearish reading, actually. Some people would start thinking that it was a little bit oversold at that point, but that's kind of where your eye comes into it. Take that basic same numbers and change it up a little bit. So here's high number of decliners compared to advancers again. Same exact thing we were looking at just a second ago, the 75 over 125. But this has low declining volume now compared to advancing volume. Right now I've got more advancing volume and less declining volume. So 0.6 over 1.66 then is 0.36, which is a very, very bullish reading, although it is an extreme reading. And that could be considered an overbought indicator, in which some people might actually look to be very, very careful about how they went long in the market. Very, very dangerous to go long in something that's so bullish because it's likely to come back. So real quick, again, what's neat about this is when I see a reading of 0.36 and the markets are completely falling out of bed, it doesn't happen that dramatically. This is definitely just an example. That would be a huge eye-catching feature to me to say that, you know what, the markets are selling off dramatically, all right, as noted by here, lots of selling, but it's not aggressive selling, as evidenced by the volume characteristics. Up in here, the volume is corroborating that dramatic sell-off in the market, and so I have a bearish reading. And you can extrapolate this to the bullish side of the market by turning these numbers upside down and working with it. So kind of cool. Take that, take ownership of it. Again, bring questions back to the table, and I'd love to talk to you about that more. That's why it's so cool, again, to see a divergence between price and any kind of reading in the TRIN, whether it's the TRIN itself or the TRIN Q for the NASDAQ. Good stuff. So I'm glad to be able to explain that a little bit. Again, bring questions back to the table, and we'll go forward from there. Hope you guys have a great night, and it's fun being with you.